I'm going to make you guys profitable with this one strategy alone, as this one strategy helped me to make thousands in the market along with becoming a profitable trader. So what is the strategy? In today's video, I'm going to be showing you guys a full ICT strategy, which is absolutely amazing. I'm going to be giving you guys a full step-by-step breakdown so you guys fully know how to trade the strategy and you're not blindly trading it. And lastly, I'm going to be finishing off the video on TradingView, showing you guys live examples on the chart so you guys can see how you can implement this strategy into the real live market. So let's get into it. Alright guys, times and pairs. Now starting off with pairs, GBPUSD, EURUSD, as they are both dollar correlated, so they do work very well on the strategy. And for our indices, NAS 100. Now guys, for pairs, I do recommend you backtest this yourself and see what it works best on for you. I do prefer trading EURUSD, so that is what I'm trading majority of the time, especially for this strategy. Now, times and pairs, 8 a.m. to 9 a.m. New York time and 12 p.m. to 1 p.m. GMT time. So now we're on to a strategy breakdown. I've listed the strategy in 5 steps to make it easy for you guys, and I've included a little diagram here so you guys can visualize it better. So start off with our step 1, mark out liquidity high and lows before the time window on the 15 minutes. So before this point, before 3 a.m. USA time or 8 a.m. UK time, you want to mark out your liquidity highs and liquidity lows. Now, this is a bit wonky, however, you want to wait for the liquidity high or low to be broken. Now, before this point, we can let market do whatever it wants. Market can go up, down, market can do whatever it wants. So we want to look for our liquidity highs and liquidity lows and mark them out. Now, we want to see what market breaks first. If market takes liquidity to the upside, if market takes liquidity to the downside. Now, as you can see in our scenario, liquidity has been taken to the upside. I don't care if it's a wick, guys, if it's a body. I just want to see a break of structure. So the market could come, break it with a wick up here and come back down. That's still a valid break of structure for me. So at this point, we'd be looking for sells, guys. If we do take liquidity to the downside, we're looking for buys. If we take liquidity to the upside, we're looking for sells. So just to get that clear. Alright guys, now we have market take out liquidity to the upside in our example, in our scenario. However, if market did take out liquidity to the downside and broke this level of structure, it does not change anything. It just changes the fact that we're looking for buys now rather than looking for sells. So just to keep that in mind. Now, we drop down to the 1 minute time frame once market breaks structure. And preferably this would be at 8 o'clock when our kill zone starts. So now, for our entries, as we are looking for entries in the 1 minute, we want to wait for our market structure shift. Now, what is a market structure shift? I'm going to draw a quick diagram for you guys. A market structure shift is basically a reversal pattern. It basically indicates to us that market is reversing. As you can see, guys, market has moved up. We'd get a market structure shift here, indicating that market now wants to move bearish. So, say we are forming higher highs, higher highs, higher highs, lower high, lower high, lower high, lower high. Suddenly, we get a lower low. So now, after we've been getting lower high, lower high, lower high, we do get a lower low. Now, after this, we would end up changing in trend. This is what our market structure shift is. We would mark it out here. So this is our market structure shift as market has shifted in structure. You can also call this a change of character. They are the same thing. So moving on. I do know a lot of you confused about displacement. However, displacement is just market moving with a lot of volume, moving with big, strong candles. Now, if you guys want me to make a video in depth about market structure shift and displacement, just let me know down in the comments, as it is a common question on the channel. So moving on to step 4, target our fair value gap. Now, from our displacement, as market is moving with a lot of volume and strong candles, we are going to get an inefficiency, a fair value gap, which is basically a gap left in between 3 candles where no wicks are seen. So, and by the way guys, if you're unsure about anything I'm saying, make sure you guys watch the video to the end, as I will be going in depth about everything in the live market, and I'll be showing you real examples where you can really picture and see everything. So moving on to step 5, targets. Targets are simple. I always put my stop loss above the swing high. So in this example, if I do enter at this point right here on the fair value gap, my stop loss will be above this high right here. Now, if this point is about 3 or 4 pips, I will go a bit higher. I like to keep my stop loss around 7, 8, 9 pips to about, I'd put it above this swing high if I do have to. Now, it all depends on the trade and the scenario. So as for targets, I do target opposing liquidity such as equal lows, equal highs. It all depends. I could target opposing order blocks. It all depends on the trade. However, a good rule of thumb is to target opposing liquidity such as equal lows, equal highs. So now just a quick recap, guys. Before 8 a.m. or 3 a.m. New York time, we want to let market play out, do whatever it wants. and we just want to, when we come around to our kill zone, we want to mark out our liquidity levels. Now, if market takes out liquidity to the upside, like we have in this example, we want to look for sells. If market takes liquidity to the downside, then we want to start to look for buys. So as we would be looking for liquidity on the 15-minute. Once we see market sweeps liquidity, we drop to the 1 minute. We wait for our market structure shift with displacement. We wait for our fair value gap. We enter off our fair value gap. Stop loss above the swing high, and we target opposing liquidity. For our fair value gap, we could enter off the 50% mark, as market most times does come to fill in the fair value gap halfway. So if you guys do want to minimize your risk, you could do that. Anyways, moving on to real market breakdowns now. Guys, I'm going to go into TradingView and I'm going to show you how to implement the strategy in the real market, as you guys have had a brief run through it. So let's get into it. Now, before I continue with the video, I just want to take 30 seconds of your time to show you guys a potential opportunity where you could potentially make thousands of dollars. So you guys have been asking me to open up a signals room and share my trades with you guys, and I have. Now, in less than 2 weeks, we are 8% up. As you guys can see, I fully send out the signals, the price to buy at, the stop loss, and the take profits. Now, I even give you guys updates on when to put your stop loss to break even. And as you can see, the trades do hit full TP. Now, 8% up in 2 weeks. That is absolutely amazing, guys. Now, 8% on a 200k account, which, by the way, we 100% guarantee to get you funded on and pass your evaluation or all your money back. That is $16,000, guys. 8% on a 200k account. Imagine making that type of money in less than 2 weeks, guys. Now, guys, the Telegram is the first link in the description, guys. Make sure you join. I can get you funded guaranteed, and I can also provide amazing signals for you guys. So if you have any inquiries, make sure to message me on Telegram at Ems Capitals. Alright, guys, on to the first example on EURUSD. Now, I'm going to be showing you guys how I caught this nearly 1 to 4 risk to reward trade. We caught 25 pips. It's absolutely amazing in what? In from about 8:12 to about, that's about 20 minutes about. So firstly, I'm going to remove all drawings off my chart. I'm going to replay the market now to about here before we hit our kill zone. Now, our step one is to hop onto our 15-minute time frame and see what direction market takes liquidity out. Now, guys, before we do get started, I do recommend you come onto indicators here, type sessions, and choose the one by Aurochs AIF. Sessions on chart. Now click it. Now go right here, click settings, untick London and Tokyo, come to New York session 8 to 9, which is our kill zone. Okay, all right, now we're on the 15-minute time frame and we have our kill zone delineated through our indicator. Now, as you guys can clearly see, if I do mark out my liquidity, which should be right here, or you can mark it out, you can mark out this high right here. If this is a bit clearer, so we have this high right here and this low right here. And as we know, market does take liquidity to the upside, so we clearly do know we are looking for sells. We are bearish on the market. Now, if I do hop onto the 1 minute, as we did take liquidity, we want to now wait for our market structure shift. Now, as I did tell you earlier, market structure shift is a reversal pattern. So as you can see, we are uptrend, market is moving up. However, you can see here, we are starting to get a change in momentum. We're starting to get a change of direction. Now, for a proper market structure shift, I want to see market come. We're getting our direction. Then market starts to change in direction. I want the body of the candle to close below this significant low. So this is how I identify a strong market structure shift, if the body of the candle closes below the low. So if only the wick closes, there's not a strong market structure shift, as the body closure shows where price last ended. So if the wick came down here, however, price closed here, market may still want to move up. I hope you guys do understand that. So let's play out market and see what we get. As you guys can see, we do comfortably close below the low with a lot of volume. Now, if I do replay the market a little bit. Now, guys, we can clearly see where are our fair value gaps. This brings us to our step 4. Where is our fair value gaps for our entry? Now, guys, if you do watch my videos a lot, you will be familiar with balanced price range and how much I love it. So as you can see here, we do. So basically, just to reiterate, a balanced price range is 2 overlapping fair value gaps, like right here in this scenario. As you guys can see, we have a fair value gap here and we have a fair value gap here. So as you guys can see, we do get our bullish FVG with our bearish FVG, and they do overlap. This creates a balanced price range, which we would like to enter off. So as you guys can see, the overlap is our balanced price range, and that's what I want to aim off. Now, I'll simply place my targets of this trade. And as for my stop loss, right above the swing high, you guys can see that's about 7.5 pips, which is perfectly fine. As for take profits, guys, I recommend you guys do partial. So if we did have a breaker, we do not have a breaker block there. However, that could have been a take profit. So I will target opposing liquidity such as this low right here. You could target this low right here. However, I'm going to aim for 25 pips, guys. I don't want you guys getting overly greedy with your trades and aiming for 50, 60 pips. You guys, with this strategy, you want to be in the market and out of the market. So let's play market and see what happens. Now, we do get triggered in very nicely. As you can see, market does leave a beautiful reaction. If we continue to play at market, boom, you can see how quickly we really did hit our take profit. Now, guys, as you can see, we are barely in any drawdown if I measure it. We have 3 pips drawdown. Now, this is because of our balanced price range. As I'm telling you guys, I can't emphasize how much I love added confluences with our fair value gaps, such as a breaker block combined with a fair value gap or BPR, whatever it is. If you have multiple confluences toward the trade, you're going to get a better entry and your setup is going to be way better. Now, guys, just to recap on this trade, so you guys know what I'm talking about. Firstly, we did take liquidity to the upside, as you can see right here. So we know we're looking for sells on the 15-minute. Now we drop down to the 1-minute to get our confirmations, where we clearly did get our market structure shift with displacement. As you can see, market closed below this low with a lot of volume and market left a fair value gap behind. Now, we had a confluence of a balanced price range, which I did use to enter, which is perfectly in our kill zone. Now, guys, our kill zone is simply there to say when we can place a trade. You cannot place a trade if it is not in the kill zone. So from 8 till 9, this is the only time you can place your trade. So as simple as that, I waited for market to hit my target, stop loss above the swing high or low, target opposing liquidity, and play at market. As you can see, we did get a bit more. However, we're not greedy with our trade. It was about what? Well, 8 pips more. So this is an absolutely amazing trade. So on to the next example. All right, guys, I want to my second example. Now, this trade was about a 1-to-4 risk to reward again, and we did hit 25 pips again. So if you guys did risk 1% of this trade, you'd make about 4%, which is absolutely amazing. So, and if I calculate from 8:30 to about 8:55, so guys, 25 minutes, 4% on your account is absolutely amazing, guys. So first, I'm going to remove all drawings off my chart, and I'm going to replay the market now. I'm going to hop onto the 15-minute, spot our liquidity, and what can I see? I can see we have a nice level of equal lows right here, which I'm going to mark out for you guys. And we do have this swing high right here. Now, I'm going to wait and see which liquidity market decides to take. So if I play at market, boom, we clearly take liquidity to the downside now. So now we do know we are looking for buys. I'm going to switch to the 1-minute time frame and wait for our market structure shift. So the reason why we wait for our market structure shift is we cannot just blindly place a trade throughout the liquidity sweep. What if market decide to push further? So market could decide to, if I just get my market decide to push further, we could be trying to buy here, but market is still pushing further, stopping us out. So we do want to wait for market structure shift to confirm market is about to move bullish in our example. So let me play out market. And as you guys can see, we do tap into our kill zone. Now, the first level I'm waiting for market to break for our market structure shift is this level right here. And let's see if market breaks it. And unfortunately, it does not break it with a body of a candle. As I said earlier, guys, a strong market structure shift is when the market structure shift breaks the swing high with the body of the candle, as the body closure of the candle signifies where price last left off. So now we have failed to break this zone. I'm going to wait for the next significant high, which is right here, and wait for this to be broken to get our market structure shift. As you guys can see, we absolutely smashed through it. This is absolutely amazing market structure shift. It's crisp and clean. Now, where is my fair value gap right here? As you guys can clearly see. Maybe if I switch time frames, it'll be a bit clearer. As you guys can see, you have a fair value gap right here. I'm going to switch back to 1 minute. This is our fair value gap now. Okay. So, guys, a little tip is you can enter off to 50% of your fair value gap. Get your Gann box or your Fibonacci. So this is the Gann box. More people are familiar with Fibonacci, so I will use the Fibonacci tool. And as you guys can see, you want to enter on your 0.5 mark. So as for stop loss, I would place it below the swing low. However, 5 pips, that's way too small for me, guys. My stop loss is normally from anywhere from 7 to about 11 pips. That's where I normally aim for. So I'm going to place our stop loss at 7 pips here. Give your trade a little bit of room to play out in, guys. Don't be trying to put your stop loss right here at the bottom of your fair value gap. You're going to get stopped out more times than you will win. So as for targets, I did target this high right here. However, you will see later in the video, market does end up pushing a lot higher. So you'll see market does break through both this high and this high. Market does end up running for 50 pips, I think. However, guys, do not be greedy with your trades. If 1 out of 10 times market runs for 70 pips, however, the rest of the times it runs for 25 pips and retraces, it is good to stick to your plan. So let's play out market as we do have our entry. Boom. We do smash through our zone and we are in a little bit of drawdown. However, that is trading for you guys. And that's why we do give stop loss enough space for market to play out in. So as you can see, we do end up in drawdown once more right here. However, that is absolutely fine, guys. This is trading. I'm not trying to show you guys some unrealistic view of trading. You will be in drawdown sometimes. However, it's about trusting the process and trusting your setup and analysis. So if I continue, boom, you can see how quickly we do here. I'll take profit. We absolutely smash through it, guys. I was in this trade for 25 minutes and we absolutely caught a monster of a trade here, 1 to 4, which is absolutely amazing, guys. So it's that simple, guys. You don't need to overcomplicate trading. From this one strategy alone, you can be profitable. It is as simple as that. Alright, guys, on to the third and final example. Now, this trade did hit 21 pips. It was a nice 1 to 3, and we were holding for from about 9 to about 45 minutes, and we did catch a nice 1 to 3. So if you risk 1%, that's 3% on your account, which is absolutely amazing, guys. Now, as this is the last example, and I hope you guys are aware and familiar with the strategy, I did take a little bit of a different approach to this entry. Now, some people try to say there's no fair value, you didn't enter with a fair value gap, so it's not valid. However, that is not true, guys. This order block is perfectly valid, and I did catch an amazing entry off it. Now, the biggest problem with ICT traders nowadays is they try to trade with zero conviction. They try to trade off strict mechanical rules. Now, guys, you're not a robot. The reality is we're both retail traders. I'm a retail trader, so are you guys. Now, some people may say, oh, you are 1 minute off your entry, your kill zone. However, it is 1 minute, guys. Or, oh, you should have took a fair value gap. However, guys, if you do trade like a robot, you will not be successful in the long term. So, guys, you do not need every single confluence to be there. So, guys, all I got in this trade was a liquidity sweep. I got my market structure shift. I got my order block entry, and that's all I needed, and it was in my kill zone. Now, with that said, it's time to get into the real breakdown by firstly removing all drawings, hopping onto the 15-minute, resetting my chart, and replaying the market now. From here, I do have 2 places where markets could take out liquidity. We have this high right here, and we have this low right here. So you can see which way market takes out. Market does take liquidity to the upside. So once we do get that liquidity sweep to the upside, again, guys, hop onto your 1 minute. Simply go into your market and wait for your market structure shift now. We want to wait for a change in direction. As you can see, higher high, higher high, higher high. We're going to wait for a higher low now, which we do very nicely get. Let me just delete these to make it a little bit clearer for you guys. But as you can see, guys, we do get a market structure shift with body closure below the low. Now, we do get a fair value gap left behind here. If you guys did enter off the fair value gap, this is perfectly valid. However, I do prefer order blocks to fair value gaps. Now, I do have a whole video on order blocks. If you guys want to go check that out, it's on my channel. And it shows you how to trade order blocks properly in 2023, as order blocks are quite saturated now and they do not work as they used to. So if you guys are struggling with order blocks, make sure you check out that video. So all I did was I outlined my order block, set my limit, and simply waited now. As for stop loss, this is 5.3 pips. I like to place at least 7 pips, so I will place at least 7 pips. As for take profit, this was my first partial, and full take profit around 21 pips here. So if I do play at market, you can see how great my entry was. Literally 0 drawdown. There was no drawdown at all. This is an absolutely fantastic trade. I opened the trade and I'm instantly in profit, which is absolutely amazing. So just to continue, you can see we do end up smashing for my full take profit in 45 minutes roughly. So that's it for today's video, guys. Thank you guys so much for watching, guys. Make sure you guys check the link in the description and you join the free Telegram, guys, where you can get funded and you can access my amazing signals. So see you guys next time.